esteemed Tim Smith to come up and be on our panel. That would also be great.
Yes, Tim, I'll get him. Where is he?
Tim's so awesome. It's funny when somebody's on the screen, it's like the face is huge. Oh, is that woman joining virtually? Ellen?
Ellen.
Oh, that's good, because then you're only half the screen. Julie, how are you? You know where we should go? There's, what? Oh, you know what's so funny? I was going to say, you know where we should go? There's a place in Harlem called Slutty Vegan. Have you seen that? What? Yeah, we should go. And I heard,
I'm looking for him.
okay. Okay. Inglewood is like now, so. Oh, good to know. I'm so cold.
Yeah, it's fucking freezing.
Next week.
Welcome, everyone, to our very esteemed panel on moving the needle, pathways to changing asset manager voting patterns. Next slide, please. And thank you very much to the ICCR staff and fellow members for making this a terrific conference. I'm Lisa Lindsley, and I've been coming to ICCR conferences for about 17 years. And it's nice to be connected, to reconnect with all of you. I'm very excited about our panel today, building on the excellent panel that just finished. So for those of you who may not know, Majority Action is a nonprofit. We're focused on empowering investors in U.S. large cap equities to mitigate systemic risks that were just discussed, such as climate change and racial inequity, through their proxy voting and the proxy voting of their asset managers. And as you may have heard yesterday, we have a partnership with the Service Employees International Union, SEIU, to address racial inequity. And as you can see from this slide, one of the impacts of what we're discussing today is that 9 racial equity audit proposals would have passed in the 2022 season if the 4 largest asset managers had backed them. And one of the things we do is we put out research reports. This particular chart is from Equity in the Boardroom, which is on your tables. And if you didn't get a copy, please see me and we can get you a copy. So why are we here? Every year for decades, ICCR members have worked tirelessly to identify issues, to collaborate, to draft letters. Hey, Tim, you're welcome. Please come up here. Okay. You're an important part of our panel. So ICCR members have worked tirelessly to identify issues, to collaborate, to draft letters and shareholder proposals and fight no action efforts and write proxy memos. And every year, the big asset managers have let us down on issues like racial equity audits, as you see here. Could I do a quick poll? Could you please stand or raise your hand if you don't want to stand, if your institution has voted against directors at companies that are accelerating climate change? Okay, you can keep your hands up, and if you filed a shareholder resolution asking for disclosure of political contributions or lobbying, if you filed a racial equity audit proposal, great. So all of you have been impacted by the issue that we're going to discuss today, most of the people in the room. Next slide, please. So here you can see how State Street and Vanguard, this is from our other report we put out last month called Climate in the Boardroom, which is also on your table, how State Street and Vanguard voted in favor of oil company directors at a rate that was higher than the rate they supported S&P 500 directors. So they love their oil company directors. Next slide, please. Many ICCR members, as we discussed yesterday, are very involved in asking companies to disclose political spending and lobbying. And here again, many resolutions were kept from achieving majority votes by the big four asset managers. So this slide is the one that is the test for today. Majority Action is looking at changing not only companies, but the ecosystem of shareholders and finance and the deferred earnings of working people that are invested into these companies. So we developed this map of the investor ecosystem, and it includes key Climate Action 100 Plus investor signatories who are covered in Fulfilling the Promise, our first report of the year, on Climate Action 100 Plus signatory voting. It includes ICCR members. They are circled in green, whose proxy voting records could be found online, and some of the largest asset managers. So this map of the investor ecosystem was constructed using institutions' asset under management on the y-axis and their support for directors on the x-axis. So you can see that the high impact climate laggards are in the upper left-hand corner. The good news is that many ICCR members who had not previously been voting against directors at climate laggards have moved from the left-hand side of the page to the right-hand side of the page. They are voting against directors at climate laggards on a much more frequent basis. So that's great. But what we need is for the left-hand side of the page, all of those dots, to move to the right-hand side of the page. And most importantly, the big four who are up in the upper left-hand corner. And of the 10 ICCR members whose asset manager relationships we were able to find, half of them use State Street, almost half use Vanguard, and a third use Fidelity. So there is quite a bit of power among the ICCR community. Next slide, please. So some of the asset managers have told us that they're not hearing from clients on the issues of racial inequity. Other asset managers have told us that the most important thing, the most powerful thing that an asset owner can do, the highest leverage you have is to fire your asset manager. We're not asking everyone to go out and fire your asset manager. We're just asking you to remind them that you're their client and that you have a vested interest, you and your beneficiaries have a vested interest in how they vote their proxies overall, not just how they vote the proxies that represent your own holdings. On Tuesday, the excellent panel that Tim led included Dave Zellner of Westpath, and he said that I believe asset managers are better positioned than asset owners to engage companies. The best use of our time is to work with asset managers. So I think that's very important advice. Next slide, please. So in 2016, the Seattle Pension Fund fired the shot heard around the world by putting BlackRock on a watch list. And this began a shift in BlackRock's proxy voting policies, along with efforts from ICCR members and others. Now, they didn't fire BlackRock, and nobody got sued, but it was an expression of the power that clients have in the asset management industry. Next slide, please. Then you've seen what New York City has done lately regarding Vanguard's exit from the Net Zero Asset Managers Initiative. New York City isn't even a client of Vanguard, and this is having an impact. But you don't need to be a city or state pension fund to have an impact. Next slide, please. The Net Zero Asset Owners Initiative that Jake Barnett has made significant contributions to has put out this report making recommendations about engaging your asset managers. Next slide, please. Share Action has a number of recommendations around what asset owners can do and should do with respect to their asset managers. Next slide, please. And the two reports I mentioned, Equity in the Boardroom and Climate in the Boardroom, have specific recommendations to engage with your asset managers over proxy voting records, and including their plans to support shareholder proposals and holding boards accountable. In the area of climate, reviewing and updating their proxy voting policies, and Climate in the Boardroom does include an analysis of asset manager proxy voting policies. Next slide, please. So Sarah and Tim and Meg at ICCR have developed tools that you can use to engage Vanguard, State Street, and BlackRock, and we'll just scroll through those slides, please. And there's a link to these both in the shareholder exchange on the ICCR website, as well as in the resources page that we're going to have at the end of the presentation. Next slide, please. So these are some basic questions you can be asking your asset managers. These are from a panel that Tim was on at the ESG for Impact conference in October. Next slide, please. And then if you use an investment consultant, this is a suggestion of how you can get your investment consultant to do a very limited in scope project to compare your asset managers with their peers. And we'll send these materials out. And next slide, please. Oop, I think you skipped one. Okay, so this is a checklist for things that active clients can be doing. And now we're going to talk to some active clients and their representatives. So I'd like to start off with Julie and Hua from Christian Brothers Investment Services. And I'm going to ask you to present on a few questions. So how did Christian Brothers start their process for asset manager accountability? Did you run into any roadblocks? And how did you overcome those, if you did? What's your system for accountability, and at what phases of the asset manager hiring and due diligence process does it get touched on? And what are the tools you developed, and which of those seem to be most effective? So Julie and Hua, thank you very much for being with us today.
Yeah, thank you. It's a pleasure to be able to speak with you. Christian Brothers Investment Services, we invest for Catholic institutions around the globe, and some of my colleagues are here, Ray Benel and Lisa Cox. And Christian Brothers is a manager of managers. We have 13 managers. We have 10 funds. So there's so much opportunity for us to speak to them on issues of concern. And we believe we're called to be active owners. Economic Justice for All talks about how important that is and how we have a role to play in active work with companies in which we invest. And for us, active ownership, like I know many of you, includes corporate engagement, it includes proxy voting, and we consider integration and ESG integration and talking to our managers as a key way we can help to move the needle. So I'm going to introduce Hua Kwok. Hua is a portfolio manager at Christian Brothers, and she is responsible for manager selection, manager monitoring, engagement. And one of the things I'd like Hua to touch on is just about a minute, Hua, if you could mention to the group in terms of just how we work with our managers and how ESG is incorporated into all these various processes. And just in answering Lisa's question, when we started that, and then I'll go into the specifics about proxy voting and what we do specifically with our managers.
All right, thanks,
great.
Julie. I can start. I think the process really started when John Geisinger, our CIO, started about 7 or 8 years ago. I think prior to that, there's this view that at CBIS, you had the investment management team that worked with the managers, and then you had the active ownership team led by Julie, and they shouldn't meet all that much. But I think the greatest impact that we can have is by integrating the two, and that's something that John started back then, and we've been integrating throughout. The biggest, takeaway for us is to talk to our managers, have them understand how important it is for our active ownership. It's right on par with our investment management. So when we see our managers, it's me and Julie or me and Ray, and we're talking to our managers, we tell them that this is of equal importance to our firm, is that you support, at least listen to our views and our what we're looking to achieve in addition to the investment performance. And to your point, Lisa, about at what stage of this process are we, asking managers about this? I'd say it's from every part of it. Before we hire them, we have a search process. Our search process, there is an entire section of our RFP that deals with ESG, how they approach ESG, how they would approach our Catholic responsible investing. And so, we will, eliminate a manager from consideration if they're not willing to work with us on some of those issues. So in the RFP process, in the manager selection process, we also meet with them on a quarterly basis, an annual basis, and we always include ESG and CRI, which is the Catholic Responsible Investing, as part of those due diligence meetings. And we assess how those companies approach ESG and as part of our investment management evaluation of those managers. And and in terms of accountability, this is a little bit newer for us, but we're starting to really think about how we hold those managers accountable for helping us engage with companies, or just at least voting and for the right things. So we have what we call manager scorecard, and not only are we measuring them on investment management performance, but also on how they support our values. And that's, proxy voting is definitely one of the key criteria of that, the support that they provide to us. And we view those as equal importance. So it's not like, we get investment management performance has a higher weight in that scorecard. It's equal. So Julie, do you want to add anything more on that?
Well, I'm going to get into proxy voting specifics. So Wa was mentioning how previously our impact and justice team was over here, investment management was over here. Now we're one team, and that started about 7 years ago with our new chief investment officer, who definitely sees our asset managers as a way to really, I think, harness and magnify some of the work we're doing on active ownership. This panel is specifically on proxy voting, so let me just address some of the things that we're doing on that, because I think there's so much opportunity, and we're on a journey, learning from others. Really appreciated that panel yesterday, hearing what Westpath's doing. Tim's work with ICCR, I think, is critical. But in terms of our process, we do have some things that we're proud of, and happy to talk further with any of you afterwards. But one of the things Juan mentioned in terms of manager selection. So some managers, we're looking at as possible managers for us, but we take every opportunity because in some cases, our asset managers are some of the largest in the world. So similarly, with prospective managers, we mention our resolutions. I had a very great meeting about our Exxon proposal. So we're taking every opportunity and trying to get their support, which they did. That was T. Rowe Price, and T. Rowe issued a vote bulletin about this climate resolution at Exxon and why they supported it. So encourage any of you that are meeting with prospective managers to even talk about proxy voting. Also, meeting with our own managers about this Exxon resolution. This one asks the company to account for climate risk in financial statements. And it's not a given that our manager is going to vote in favor, right? A lot of these managers are voting with maybe ISS mainstream, don't want to rock the boat with companies they're very much tied to, but we had a meeting with 3 of our largest asset managers about Exxon, gave a presentation. They all ended up supporting our proposal, but also mentioning the Chevron proposal at the same time, which was filed by As You Sow. So meeting with our own managers about the resolutions. And at every meeting, Juan mentioned we have quarterly meetings with our managers. We always raise ESG issues, and in some cases, also raising issues about proposals. So for example, we had invested in Fastenal, a company that, As You Sow, had a resolution about board diversity. The company didn't implement it despite As You Sow's great work, getting 64% in favor. So our asset manager brokered a call for us with the chief financial officer, and we got to make a pitch as to why we think board diversity is so important. And thanks to As You Sow's effort, and probably many of you in the room, the company did take action. But just, another example of how we're trying to raise the profile of other people's resolutions in addition to ours. Importantly, I think one of the things we also do is survey our managers. I think Lisa had put as part of resources a survey CBIS sends to all our managers, a big section on proxy voting. And some of these are in the checklist. What proxy advisor are you using? Share the proxy voting guidelines. How are you voting on key votes, of which we're very concerned about? Who's responsible for proxy voting? So I think really understanding what your asset managers are doing as it relates to proxy voting. And so Lisa's great report, we took that result and we went to one of our managers who ranked very poorly in her report and had a conversation with them. Why did that happen? What could you do better? They were really, I think, surprised that we had brought that to them. They had some rebuttals, but they actually took on board some of our suggestions about ways to improve. And I think that's a great tool for those of you that use some of those asset managers. And I think Juan mentioned a scorecard that we use. So we're rating all our managers, and one of the components is on proxy voting and key votes. And I don't want to keep talking because I'm going to overstay my welcome. Okay. And Juan may have other things to add, but, we do our own proxy voting. So these managers aren't voting for Christian Brothers, but there is an expectation when we meet and hire those managers that they are going to work with us on active ownership, whether that be engagements, whether that be supporting our resolutions. And there's knowledge, because they know about the scorecard that includes proxy voting, that this is how we're holding them accountable. So I feel like there's so much opportunity to work with them because, I mentioned this journey, and we've mostly been focused on our own active ownership efforts, getting them to support us. Lisa Cox is doing on our team work on Apple and child sexual exploitation online. We've alerted our managers that are among some of the largest holders of Apple, the concerns that we have. Our Exxon resolution, how are they going to vote in favor? But I think our manager that we met with about Lisa's report, that should continue. So when I mention our journey, we need to do more with our managers about proxy voting, especially about directors. I think the manager was very surprised. They started telling us about the resolutions they support and said, as a lead asset manager, it's really not their policy to go against directors. But we offered other suggestions, like they could write to the director and say, you know what, this year we supported you, but we are taking a look at this, and we really have concerns about X, Y, Z, and we'll be paying attention next year. And I think Lisa also mentioned managers, large asset managers, all part of Climate Action 100. And Climate Action 100 has on their proxy page for everybody to notice where you should be voting against directors, what resolutions you should support, all related to climate. So I'm going to stop there. I don't know if Wah has able to fill in anything I missed, but then we'll switch over to Anita.
To Ellen.
Ellen. And, there's Wah. Okay.
Sorry, just like, I think one thing to add to what you're saying, Julie, I think we can't emphasize this enough, that the integration of our two teams, when I talk to the managers, I think a lot of managers don't give it enough thought. They just go with the recommendations by their proxy service. But when we bring, your team, the Impact and Justice team, into our meeting, you bring up issues that perhaps they hadn't really given that much thought about. And I've seen the impact on how managers think about different issues because we raise them. And I think that just really highlights the importance of having that integrated approach to both investment management and active ownership.
Great, thank you. This is so you're a wonderful example of an ICCR member who's using their power as a client of big asset managers to hold those asset managers accountable for their proxy voting records and to address the systemic risk that the excellent panel that preceded us was lifting up. And as Julie mentioned, Christian Brothers has generously shared with us to share with all of you a sample questionnaire that they use for their asset managers, and that will be included in the resources for this session. And so we'd like to go now to Ellen Shu from West Fuller Advisors. And Ellen, first, could I get a show of hands in the room here of how many people use an outsourced CIO for your institution? An OCIO, okay. Just a couple. Great. So, Ellen, maybe you could just briefly say what an OCIO is and does. Then what is West Fuller's experience engaging asset managers on behalf of OCIO clients regarding proxy voting performance? And what were some of the changes and allocations that occurred as a result? Any obstacles you encountered or needed to overcome in order to address a misalignment between asset manager proxy voting and your clients, how you overcame those, and how asset owners who use OCIOs can involve their OCIO in this process.
Sure, absolutely, and really great to be here. My name is Ellen. I work at West Fuller Advisors. We are a values-aligned investment advisor serving high net worth clients and institutions. We also work with Vivium Capital, which is a firm out in San Francisco. It's a strategic partnership in which we provide values-aligned investment solutions to charitable organizations and endowments in the capacity of an OCIO, an outsourced chief investment officer. So how I explain an OCIO is if an organization doesn't have the resources to have their own internal investment team, they will seek out an outsourced chief investment officer to delegate that authority and that investment authority to an investment advisor like Vivian West Fuller to make those decisions on behalf of an organization. And that really incorporates a very aligned and continuous dialogue that we have with our clients. We really engage our clients from the very start. So working with them in developing an investment policy statement. That investment policy statement is a contract that really governs the relationship between an investment advisor and an organization and the asset owner. That part of that policy then becomes the guidelines that we share with the underlying managers that deploy the capital. And it's important because it really determines how the managers vote for proxies and invest in alignment with the organization and the asset owner. So on the investment side, Hua, shared a lot of her process, and we kind of mirrored the same in our investment approach, we select managers that are values aligned. So thinking about ESG in the public markets and how do they really serve their communities on the private markets. We ask managers about what are their successes, what are their challenges in engaging corporate management, what are the priorities on these issues? Do they prioritize climate versus labor issues, et cetera? And what are the resources that are really dedicated to shareholder engagement for these managers? I think the most difficult aspect is being patient around this, because typically these shareholder engagements tend to be multi-year conversations. So waiting for change really takes a lot of patience. It takes a lot of influence and persistence. So for us, when we're engaging with those managers, it's checking back in, tying our conversations on a quarterly basis with our managers back to proxy voting. How is that conversation going with the State Street? How is it going? What has been moved? Have there been challenges? What other approaches are you taking? In terms of proxy voting, we primarily work with boutique managers through separately managed accounts, which means our asset owners own the shares of the underlying companies, and so they can vote proxies. And right now we're engaging with ISS to augment our proxy voting practices, specifically with their socially responsible investing policy. Another initiative, we signed an open letter led by Majority Action, as you heard at the beginning of this panel, called for asset managers to vote for shareholder initiatives on racial justice. So we've participated with Vivian on this. The letter went on to secure more than $2 trillion in signatory assets, and we're really excited to have been a part of this initiative. I also wanted to highlight an example. One of our clients, the Heron Foundation, they moved their assets into a more values-aligned investment advisor because of the changes in how they perceive their asset manager. So the story here is Heron was really invested in an investment advisor, a values-aligned indexer that came under the ownership of a majority asset management firm. And because of this change in ownership, they felt that the direct indexing strategy was really no longer aligned with the organization's mission. And so Heron decided to work with Vivian Westfeller to select managers who were more intentional and more values-aligned. So in working with Heron, our firm developed 2 customized strategies. One with Baylard, which is a woman-owned, values-driven asset manager based in the Bay Area. And the second is an asset management firm called B Square. It's a BIPOC-owned and led quantitative investment shop. B Square has sustainability at its core of its investment process. So these strategies were constructed in a manner that selects the most inclusive and sustainable companies, and taking into consideration all the stakeholders. So the investors, the employees, the broader community, the customers, the suppliers, and also in the environment that affects us all. And proxy voting, of course, was part of the design, as active ownership really plays a key role in supporting a holistic, responsible investing strategy. So since working with Heron on this engagement, the strategies have been funded, they've been implemented, and we're really pleased to partner with Heron in a further capacity as its outsourced chief investment officer. So I know I took a lot of time there, but more than happy to expand on any of this.
Great. So just to recap, Heron Foundation had hired you as an OCIO, and they had an allocation to kind of an SRI fund, SRI manager that was acquired by one of the big 4 asset managers. And they were unhappy with how that now subsidiary of one of the big 4 was approaching their investments. And so they switched with your help.
Yep. That's right.
Great. Thank you. Thank you very much, Ellen. I wanted to just lift up a couple of things that Ellen said that link back to the session on Tuesday, which is the importance of having an investment policy statement that can unite the investment arm and the stewardship arm of the same institution when they're approaching their asset managers. And I know that Julie has told me that Christian Brothers also has an investment policy statement, so that's something really important. We're also in our collaboration with ICCR, with Tim and Sarah on asset manager engagement, we're trying to collect more information around ICCR members. So we'd really appreciate it if you could fill out the surveys that are on your table. They can be anonymous, but it's really important information for us to collect afterwards. And so I'd like to next ask Anita to give us some information about some tools that the Investor Alliance for Human Rights has developed in terms of asset manager accountability. Anita?
Great, thanks so much for that, Lisa, and great sort of scene setting from the previous speakers. And so I think one of the things that I kind of wanted to highlight, particularly when Ellen was talking about the different asset managers that they chose. I mean, just like when we are engaging with a company and we know the company's practices aren't great or their suppliers' practices aren't great, we push the company, our portfolio company, to say, what kind of due diligence process have you done on your supplier? And if the supplier is not doing what you want them to do, or they're doing things in a way that doesn't, goes against a certain your policy or harms people, you need to change that supplier, right? Or you need to engage with that supplier so that they can change their practices, or you want them to change supplier itself. And that's the same thing in a way with asset owners, right? So asset owners, who are their suppliers? Asset managers. They're a service provider to you to do a service for you. And if that service, so the whole process of really choosing your asset manager is that whole part of doing that due diligence to ensure that that manager is suitable and will carry out what you're asking them to do in the way that you want that to happen, and to ensure that the impacts that you are looking to achieve are achieved through that. So that's essentially, I guess the what I'm going to kind of roughly speak to.
It seems like they don't have their slides. I don't know why.
Okay, no worries. Okay, so one of the things that we wanted to talk about is that, and I guess we do keep mentioning this, but the Investor Alliance has put out an investor toolkit for human rights. And in that investor toolkit for human rights, we really talk about that journey that that Julie talked about. We're all on this journey. Don't worry about it. Slide's not important. Don't worry about it. So that journey, and what it does is it kind of tells that story and gives you pause at each part of your journey as to what you need to do. And so if you look at the investment life cycle as that journey, I think we're all very active on one of the stages of the investment life cycle, which is the active ownership stewardship life cycle. And what we're saying is that that journey should, or applying that active ownership should start really at the beginning, when you make that decision on who your asset manager is going to be and how that asset manager is going to then manage your funds. So, so that investor responsibility starts really at the beginning of the investment cycle, how you choose your manager, and how you as well, and choosing that manager means, as Lisa was mentioning just now as well, is you always start with an investment policy. And what does your investment policy say? So that's the start of it. So in the investor toolkit, we have a couple of suggestions, almost like a checklist as to what would be important for you to put into your investment policy. And that investment policy basically is your expectation statement of what you expect from your managers and from your portfolio companies that reflect your value system. And so, firstly, having that investor expectation statement, and then communicating that investment expectation, right? Oh, okay, great, thanks. And that's what it is. And if you can kind of flick to the next slide, please. So that was kind of what I was talking about, the journey. And we're all, very active in the third little bubble, which is responsible investment stewardship. But really, we need to start it at the beginning, as we, prior to investment decision. And so prior to investment decision is choosing your asset managers, choosing your portfolio companies, and working that way through. And it's a journey. And it takes time, and we're all learning as part of that process. And hence, we have sort of great best practice coming out through that journey from the discussion with Ellen, Julie, and Hua. So if you can hit, I think, the next slide. Yeah, so this is kind of what I was getting to, which was this idea of formalizing your human rights expectations, and then the most important thing, communicating those expectations to your asset managers and also to the portfolio companies. So once you tell your asset manager this, and there are ways in which, Julie gave some examples of how they hold investment managers to account, but when the investment manager decides on a particular portfolio company, those same investor expectations should be as well communicated to the portfolio company. So they know the expectation. This is what this investor's putting money into you for, and this is what they expect from you. You need to create those expectations at the beginning. So this sort of, what we're just sort of flashing up on the slide is some of that information. And the next two slides are just some of the questions that you can ask for asset owners to ask asset managers, and it's all in the toolkit, and I've referred to that in the toolkit. But I wanted to just close off. I think there is always a concern whether an asset owner has that much leverage over an asset manager. And through our various conversations with members, we've been very lucky to be able to have a lot of conversation with members. We have asset owners who have been speaking to their asset managers and pushing them to say, your behaviors are not up to par, you are not reflecting our requirements as it relates to whether we use the term ESG requirements or other requirements. And asset managers have had gone back to this particular investor. This investor has less than 100 million in their as their assets under management, so it's a fairly small fund. And so the asset owner called bluff and said, hey, I'm going to pull out. And they said, yes, sure, go ahead. And the next day when they got the letter from the CIO that said that we are going to take steps to pull our 100 million from you, they immediately came back and said, okay, let's talk. Let's come up, let's talk. Let's understand what it is your requirements are. And they did come back and created a specific index, group of companies that they were investing in. And what's been interesting about that is that index has been doing really well as an ESG fund. And they are now selling that to their other clients who are doing really well. So I'm just saying that, you do have that leverage, you do have that power. And so that was a great example. So thanks for that.
Great, thank you very much. Now I'd like to ask Tim to tell us, give us some more background in terms of the steps that ICCR and ICCR members have been and will be taking around asset manager accountability.
Thank you very much. And I'm really pleased to be part of this discussion, and my colleague Sahara and I are going to be working with folks like Lisa to move this agenda forward, along with many of you in the room. This is such an important panel, but it builds, as Lisa said at the very beginning, on a history of action by ICCR members who pay attention to proxy voting and what their managers are doing. So I'm going to do two things. One, I'll just repeat or rehearse some of the actions that members have been taking in the past, and then give a glimpse at where we're going forward. So all of you are aware of certain things that we've been doing for years. For example, knocking on major investment managers and funds' doors to petition them to vote for resolutions. Julie talked about that. We must have had scores and scores and scores of such calls with managers who are increasingly opening their doors to have a discussion with investors who are proponents and want to explain why these resolutions are important. And of course, we do that with ISS and Class Lewis too. Secondly, many of you participated or were in the room when we had the discussion the other day, which I thought was really interesting, between CIOs and stewardship teams in a couple of denominations, and there are many others in the room who are doing this kind of work together, finance and faith, as we talked about it, but also are engaging their managers. So I think we've never at ICCR gathered sort of a list of folks who do it and who could share information with each other. But as Lisa said, that's important. CBIS is willing to share. Westpath, the UCC will gather that, and we'll share that with people so you can see what your colleagues are doing. And Lisa's even pointed some helpful tools where we'll give you, here's a good set of questions you can ask your managers. You don't have to do, Jake and Westpath may do 25 questions and it's a long questionnaire, very thorough, but that's not necessarily something we all have to do. We just need to let our managers know you work with us, for us, and we're trying to encourage you, support you, and hold you accountable on this. By the way, this is a theme that's been forever highlighted at the Principles for Responsible Investing, and many of you in this room know that globally, this group, PRI, has investors with $120 trillion of assets under management. Now, that includes asset managers as well as asset owners, as well as groups like pension funds. But the theme there is very much the theme that Lisa's been raising here. It's not a sort of a radical new thought. Gosh, we need to hold our asset managers responsible for what they're doing with our money on our behalf and for which we pay them. So we will continue, I think, if CIOs are interested in this discussion, we'll continue to have sessions, webinars with members of ICCR's CIOs who would like to continue to discuss the issues they face as financial executives putting ESG into effect. Another thing we've done, some of you participated, I think, Sahar, we had a very good turnout for a webinar you did where we analyzed, as Lisa has, some of the major voters, managers and funds, and how they voted on ICCR resolutions. So we've been trying to educate ourselves about just what do those snapshots look like and what do we do. And specifically on proxy voting, just to remind us, many of you may be aware of this, but a number of members of ICCR, I'll just mention a couple, Mercy Investment Services, Friends Fiduciary, Boston Trust Walden, Zevin Asset Management, United Church of Christ, and others have actually filed resolutions over the years with investment firms that are voting proxies. So these have been filed or engagements have been held with BlackRock and Vanguard, State Street, T. Rowe Price, JP Morgan, Bank of New York Mellon, Goldman Sachs, and a lot of smaller firms that maybe you wouldn't even be aware of. But the whole idea of saying how you vote is important to us. We want to engage you on that is important. What have been the results? Well, it's probably mixed, right, Lisa? But we're seeing more and more companies being much more transparent about their proxy voting process and giving you some case studies, some examples like BlackRock and Vanguard do that. So there's a little bit more information coming from the investment manager community. And a few of them, I think we've seen improved voting records. And then unfortunately, we've also seen slippage where we thought maybe there was forward movement and huge managers have slipped backwards on voting on issues like climate and diversity. And they still have records that are pathetically low. So another example that we can turn to is the endless discussions we've had at ICCR meetings. I don't see endless in a pejorative way, just like we have to have them all the time, about building the vote. You know, trying to encourage people to vote for us, which includes some of the biggest managers in the world who are our members, or sorry, our managers. So just a little rehearsing of the fact this is not fresh, but we're trying to move, right, Lisa, into a new chapter of this work, expanding it, making it more intentional, making it more coordinated and more powerful. So Lisa's reports are exceedingly important tools, we continue to need to share those. And others that Sahara and I have found, I bet there's 5 or 6, right? Morningstar, a 120-page report they just came out with on proxy voting. Sahara's own work, Share, Series, others do snapshots of proxy voting on given issues. We want to share those with each other. There is up on our conference website a 2-page plan that we have ready to sort of move forward on. And one of the first things that we're going to do is that we mentioned in an earlier session, building on the kind of research that Majority Action and others have given us. Sahara has crafted, and I've worked on a letter that we're going to send to some of the, what do we call them, bottom feeders, the poor, the poor voters. There are about 8 to 10 that we'll probably engage and say, you need to be aware that your record is being reviewed much more than it has in the past. Our members are concerned about this. We want to send you some resources on this, and we want to ask you to try to clarify where you are going and what your record is. We're going to try to get this out soon so it affects this proxy season. It's based on information from the past, of course. But we won't stop there. It's not just a letter from the staff of ICCR. We'll encourage members, if they wish, to say, oh, we use some of those firms. So then they get a chance to write a follow-up letter saying, you've received this letter from ICCR. As you know, we're your client. This is our concern too, and we'd like to hear from you. So that's going to be an important next step. We'll be working to try to coordinate, share information, give you tools if you wish to get involved in this space. Everybody here is very busy. Therefore, the more that we can give you something that you can say, oh, I'll unwrap this, I'll fine-tune it, and I'll send it to a manager, the better off we are. So thanks, Lisa, for this panel and for the partnership that we've forged here. Thank you.
Great, thank you so much, Tim. And that those letters sound very exciting and a very good base on which to build ICCR member actions. So I'd like to see if our Zoom panelists have any closing remarks or further thoughts about what we've been discussing. So first I'll go to Hua.
No, I'll outsource that to Julie to give us any closing remarks.
Okay, great. How about you, Ellen?
I think what Anita said really resonated about really holding your asset managers, your investment advisors to the same standard and accountability that you want to see your portfolio. So continue the dialogue really about what your most important priorities are in terms of proxy, in terms of your mission of your organization.
Great.
You know, we forgot to add to the list, Lisa, of course, it's implicit, consultants. So if people
Yes.
use consultants or have consultants, sometimes they're very helpful in this process. I think the United Church of Christ uses a consultant who basically does the surveying of the managers and lets them know that they care. Some consultants, at least the history would bear out, basically say you can't do this, you can't do that. It's not fair to raise this with the managers. They are blocks and they need to be held accountable too.
That's a great point. And we do have a list, we do have a small project that asset owners can assign to their consultants. We have one slide on it. And that came about at the suggestion of a top 10 asset manager. I asked them what the most impactful thing as small investors could do, and they told me that. And that same asset manager said that, you know, the most important lever you have is the power to fire your asset manager or your investment consultant. So, yeah, I think that's a really good thing to bring up.
I'll just add to that too. I mean, there are important stories of companies, very important consultants changing. I'll reference Cambridge Associates, which is a huge consulting firm in this space, who tells the story on itself that years ago, they had a client who basically was pushing them to move forward on mission-related investing. I believe it was a foundation. And they were not feeling so enthusiastic about it. And the client basically said, you know, if you can't do it, we're going to go to somebody else. And they came back and they did talk to that client and found there were others. And now they proudly say that ESG is part of the DNA of Cambridge Associates. They're a leader. Now, we might analyze that further and see how far it goes, but it really helps us to have Mercer and Cambridge and other consultants really being champions of this work and talking about the shareholder value that it protects.
And at the same time that Vanguard left the Net Zero Asset Managers Initiative, Makita left the Net Zero Investment Consultants Alliance. So there's some accountability there. I want to make sure we leave a few minutes for questions. So if you have any questions, go to the microphone. And I don't know, do we have any online questions? I'm not able to see them.
We have a question online from Stephen O'Neill. It's for the panelists and for the room, asking if anyone else is not voting for compensation committee directors in companies with egregious CEO pay ratios.
Sorry, who's that from?
Stephen O'Neill.
So are you voting against directors if comp is? Okay. You heard that, eh?
We are.
Okay, go ahead.
Yeah,
Why
yeah.
don't you just go ahead and answer it?
Well, I don't know if the question is about, are we asking our asset managers about that? But that is comp packages, and voting against directors on comp packages is critically important, and something we have raised at the Catholic Roundtable that ISS holds. We use ISS, but the comp packages fly through at something like 25%. ISS votes against comp packages, and we all know so many of these packages are egregious. So we have a custom overlay, because that's something all of you can do as well. If you're using a proxy advisor, who maybe you're using ISS, SRI guidelines, for example, but you can have a custom overlay where you provide a higher level, a higher standard. And we have raised with ISS, and they actually said they're going to be improving those votes against comp packages. And I know Institute for Policy Studies always does a report on the 100 highest paid on comp packages, which is just astounding. So encourage all to do that. We do that ourselves, but it's an interesting question because that hasn't come up in terms of us engaging our asset managers. So I like that.
Actually, the history of asset manager engagement, as far as I know, started with the late Rich Ferlato when at AFSCME, and I had the privilege of taking over when he went to the SEC, and it was about CEO pay. And so AFSCME put out a report on CEO pay and how we called them mutual funds at the time. We're perpetuating the rise in that, and that became the Paywatch site that the AFL-CIO now maintains. So there is a long history of that, and we also did a lot around the conflicts of interest that asset management firms have when they're trying to get the 401k plans of large corporations, and they want to get the fees associated with those plans. They're very reluctant to vote against the pay of the CEO.
Yeah, I mean,
I just-
sharing prosperity for all is one of so much of our work, and all of you in the room, so it makes so much sense to have that focus, and also looking at that pay ratio data that comes out, something I think we pay attention to too infrequently. But I'd also mention stock option plans are another opportunity. We have that as a custom overlay on our plan, but any top 5, if 25% of the options, if they earn more than 25%, that's not sharing prosperity broadly, so we'll vote against those stock option plans. But again, not something that we've checked with our asset managers. So on our journey, we can be integrating that.
Tim, did you want to add something?
I did. I think this is a fascinating example that Steve asked about, because for decades, investment firms have voted on pay packages, well, since Say on Pay came along, and voted against directors because they see that as holding the comp committee chair accountable. And they probably wouldn't even have called that sustainable investing or ESG. That wasn't under the rubric. They just thought, well, that's good governance. You've got to be holding a company accountable. It's stockholders' money. The stockholders maybe are suffering and the CEO's pay is going up and up. We're going to vote against it and vote against the comp committee. And so that was seen as, oh, of course you'd do that. And now what Lisa's done and others is, of course, pointing to the fact that there are other very significant issues that should result in us saying, well, maybe directors need to step up and we need to hold them accountable. So
I think we have time for one more question. Is there more online, Sarah?
There isn't a question, but there is, Michael Passoff shared an example of how they vote against compensation committees if we vote against executive compensation, and we vote against the nomination committee if it nominates the CEO as chair, or if there's less than 30% gender diversity on the board. So that's their policy in practice.
Great. Well, I think we're at time with that, so I would like to thank the ICCR staff and our panelists, and especially Tim and Sarah for collaborating on this panel, and all of our panelists and our panelists online, and all of you. Thank you for participating. We're going to have a break for lunch, and please come back at 1:45, where there will be a session called Big Risks, Small Packages, the Indispensability of Semiconductors to Drone Warfare and the Modern Face of Global Conflict. Thank you.
Thanks, Lisa. For putting this together.
No, I was thinking like if your slides were in public, like I was thinking I would say to Wilmington, this